Our next power panel is going to talk about insuring the future. Ladies and gentlemen, join me in welcoming our panelist for the discussion. We have with us Mr. Anand Singhi, Chief Distribution Officer, Reliance General Insurance, Mr. Parthanil Ghosh, President, Motor Business, HDFC Ergo, Mr. Jagjit Sidhu, Senior Executive Vice President and Head, Multi-Channel Distribution, Kotak Mahindra General Insurance Company Limited, Mr. Gunasekhar Boga, Executive Director, IFCO Tokyo General Insurance Company Limited, Mr. C.S. Vigneshwar, Secretary FADA, who would be moderating the session on insuring the future. A very warm welcome to you, gentlemen. Welcome, gentlemen. Please take your seats.
First of all, thanks so much for you folks to join us today. And we understand that insurance as such is a very important vertical in terms of profitability to every dealership. We had at length discussed earlier, different speakers talked about how every vertical probably needs to be invested on and probably also looked at as a profitability center. And insurance is a no-brainer in terms of how it contributes to profitability within our system, within our ecosystem of a dealership. And more importantly, it is also a very important tool for customer satisfaction, because a lot of times an insurance complaint, which usually comes from an accident in a body and paint shop, can actually cascade on to a very bad customer experience. But I guess a good dealership with great partners in insurance can deliver extremely high customer satisfaction. Having said that, I would really we'd really like to dwell more on a larger subject here, because insurance today, it is not only something which the dealership, the OEM and the customer probably experience, but there are also regulatory compliances which have become a lot more stringent and a lot more reaching in impact. One of the more recent impacts have of course come up from the MISP guidelines, which have come of recent. And these MISP, although bringing a lot of clarity to the business, also brings in a lot of stipulations. And yeah, what we're going to discuss right now is a policy matter. I don't think we can make policy, but at least we can influence policy. And from the dealerships, we've always found there are two challenges here under MISP. Where the larger overreaching impact of insurance in India is always that either we are either a property or a person or whatever, liabilities are either underinsured or uninsured. Having said that, at automobile dealerships, we have a large pool of data of thousands of, or sometimes even lakhs of customers. But when MISP says we can't cross-sell things like health, things like life, aren't we actually walking away from a great opportunity, both as a nation and more importantly as a dealership, away from venues by which we can actually close this gap of underinsured and uninsured? At the same time, can we create value for the customer and for the dealerships? I would like, if Anand, if you can take this question to start off with.
I think Vignesh, you put in a fix on the regulation side, but let me tell you, I think the short and sweet answer there could be one at a time. If we look at from a regulator as well as industry point of view, predominantly we have to also understand the background of MISP and why did MISP come into force. So there was a point in time when this entire fraternity was absolutely unregulated, at least from an insurance regulator's perspective. And that's where a lot of deliberation and debate was happening, that what is the right way to kind of really formally accept the channel as a key distribution channel in the insurance world. And I think that was where the insurance guidelines were kind of really modified and invented, where MISP guidelines were established for the dealership vertical, right, and for the automobile space specifically. As we are moving ahead, I think it's fairly clear that MISP has become one of the very important and core distribution models in the insurance industry, and there is enough and more conversation which is happening in terms of how can we make best use of our consumer data, how can we make best use of consumer requirements, and that's where enough and more amount of deliberation is happening. There is great amount of clarity within the industry, and there is enough and more amount of conversation happening where I think at a point in time, possibly the guidelines will get relaxed or we'll have new modified guidelines where the insurance distribution arm of broking of the distribution channel can also kind of sell alternate set of products. Having said that, I think as of now, whenever we have interacted and conversed with our dealership fraternity and friends out there, there are ways and means to kind of really still undergo that bit of business model and still underwrite that bit of business model. But I think what's very critical for us as we're going to move forward is at the dealership level, we will need to essentially initiate an exercise about understanding our consumers, right? So we have heard a lot about KYC, but I think it's more about understanding our consumers because the larger relationship as of now is only auto-based. But if we will really want to move away or move ahead of auto and look across at alternate business lines, we first need to understand the consumer well and understand the set of requirements. So I think there has to be some standardization around that which has to come for the industry at large. And the moment that happens, I think the guidelines supportive to that context will allow us to kind of unleash the real cross-sell opportunity in a big, big way.
So what you would be probably saying is that the depth of skill would there wouldn't be the depth of skill to handle these different kind of insurances at dealerships?
I will not say that the depth of skill is not existing, but my larger point is about standardization around the depth of skill. I think that's something which will be critical because the moment we are going to move around and away from only motor insurance to be able to, let's say, handle and have conversations around health insurance or have conversations around commercial insurance, there is a technical ability investment which you also need to do through. The moment we start to do that, there are models through which we can still underwrite various format of policy, various format of risks which are available there. But most critical for us is going to be have that depth of intellect being established out there. And then say that yes, there is intellect and there is our intent to be able to see that how do we really grow this and kind of really convert into a big business volume. I can name it out, but there are few dealers who have already ventured out. Some of the dealers have kind of created or established their own set of broking firms also. And they are very, very clear that insurance as a business is a great opportunity. And I think the decade ahead is going to be a brilliant opportunity for all of us to really kind of really use the large consumer base of data which we have.
Mr. Gunashekhar, what we have seen under MISP also is that yes, there's a lot of regulation. There's also been better understanding of what our roles are required, what are the roles are required of us as dealerships. But again, when you look at it, yes, skilling is one requirement which probably needs to happen even within our current requirements and how we can do it better. But again, in case we want to go in for cross-selling, and there are models where cross-selling exists, how as dealerships can we contribute towards this one? And more importantly, how are we going to make sure that the skill levels are there at dealerships? Because today's dealerships, we have large insurance teams and it can get even more larger and even more focused. And moment it gets even more focused, there are a lot of opportunities which probably prop up. So what is your thought about it and have you seen best practices in the industry currently?
Thanks, Mr. Knishran. My personal take on this would be like if bank can sell all type of insurance, a dealer also definitely can. But as of now, unfortunately, MISP guidelines doesn't allow us to do so. Only with a concern saying that motor dealers are totally focused and they know probably only best out of motor insurance. And there is a threat of mis-selling. That is the only concern by IRDA. So that's why they have allowed this particular channel to sell only one type of insurance product. But having said that, now we have a lot of hopes. Now new IRDA chairman is quite open, dynamic, and then he is opening up a lot of things. I'm sure he is reviewing and listening to all the dealers also. And he realized the potential and capability of dealership and the skills, additional skills what you have in consumer behavior, and then there is a huge data potential is waiting to be sold. And many such products, let us say if a particular customer is believing you, trusting you and walking into your place for such a large commitment, but why not for some other commitment? Plus, every customer, whoever walks into your showrooms, expects a one-stop solution for all finance as well as insurance requirements. So they need not have to go to the different doorstep for all these things. I'm sure, I expect that dealership channels also should be opened up for other products also. Of course, with due trainings and then maybe like all other guidelines, whatever they revise from time to time. And we are there to back you because we know the dealers and we have been working with you from decades and all of us are together. And we don't allow that mess selling also to happen. So we are here to work together. I'm sure this opportunity should open up. That's what is my call.
Thank you so much for that. So well said, because when it comes to finance, we finance the customer's old vehicle, we finance the customer's new vehicle. And today, even the service cost, accessories, and insurance is financed. So when it comes to that, I think there's a huge opportunity to be taken. And let's see if time gives us that opportunity. Again, coming to another MISP thought. A thought in that saying that MISP actually right now says that every customer who walks in probably needs to be given cashless facilities. We as dealers, we are there to serve the customer. We'd love to give cashless to everyone, anyone who walks in. The only issue which comes in is we as businessmen, we look this as a credit given to a customer / an insurance company. Is there some possibility where an SOP can be brought in, where the money committed on a particular work is actually paid to us on time? Because right now, sometimes there are certain OEMs who have certain programs running, and to an extent they are able to control terms and conditions, service levels. And these service levels actually give us confidence saying that because it's OEM backed, we'll probably get back our money quicker. Because let's say if each insurance company keeps delaying payment, that runs into crores of rupees, and that in turn affects our working capital. So is there any way where a proper SOP can be brought in so that all claims can actually be settled within a particular service level? And how this can be done? Because it's quite different. Each of you all have a very different system in terms of IT and in terms of your own SOPs in organization. So I would probably like to know, or what is the possibility? If this happens, then I don't think we'll be fretting as dealerships to giving credit to anyone who walks in. Mr. Ghosh, would you like to answer this, please?
No, sure. So, of course, we realize and appreciate the point that your cash flow is of huge concern when it comes for giving a credit or a cashless. So I believe across a number of insurance companies that I know, that their internal systems have got improved in the last few years because of the digital journey and so on and so forth. And the turnaround time for the payment as soon as the invoice is generated is made between 1 to 3 days. At least the company that I represent is Ergo. So this is one of our internal SOP, that how fast we can turn around. And as you mentioned about the OEM run programs, though there is nothing called a OEM run program in legally speaking. So there are brokers who are running programs, and every broker do have an SOP which stipulates these conditions. Now it is also up to the dealerships or the MISPs in that sense to choose those insurance partners based on the internal SOP and the guidelines that you create. So there is no bar in saying that, okay, fine, you get a credit, but the credit period is 3 days. And if it is not coming in 3 days, then it's a problem. Though to everyone, you have to give a cashless. But you have a choice of getting number of insurance players. And I believe in this competitive world, whoever will not be able to give you the payment within the stipulated period of X days, so their business will reduce and you will pass on the business to someone else.
I think that's so true, because not only customers have a choice, but you are saying that even every MISP has a choice of who to work with. Although we are asked to work with everybody, so we are there to stipulate on kind of credit whom do we give to. But it's kind of a gray area in terms of who do we work with and whom we can make a choice.
So if I can take that question, because the regulator has been very clear that the customers should be given choice. And thereby, just like the web aggregators or the marketplaces that we have in this country, so all the dealerships, the MISPs have been told that the customers should be given a choice and there should be a proof. And we know that at least in this broker-led program, they have already come with a marketplace, and that particular program controls almost 50% of the private car business. And what it has done suddenly, where they have put one condition for the customers to say what is the claims servicing experience of generally the customers. It is almost like a customer rating. So that is forcing the customers also to have the right choice. So that has already come. So when you are saying that how you can force that choice to the customers, actually your sponsoring broking company is actually passing on the information to the customer to say that X company, the rating is 4, Y company rating is 3.5, G company is 4.5. Now, this is one data point. The other data point is, of course, the premium levels. Now you choose what you want to choose. So in that manner, and the way the customers behave nowadays, thanks to the e-commerce platforms and others, I think the customers are making the right choices. So it is changing. The customer behaviors take some time to change, but it is changing.
I think transparency is what you're talking about, and the right of making a choice. So the customer, I think, is best placed to probably make the choice, which is probably good for the whole system. Since we talked about it, I would also like to touch on the online aggregators. Mr. Sidhu, when you look at the online aggregators right now, they're quite competitive in terms of being quite aggressive in terms of pricing. But sometimes this pricing also compromises on on protecting the quality for the customer. We've had a few instances, all of us know what's happened in the industry. How do we together address this issue as MISP and MISP partners? And also, what role should each of the stakeholders play in this to make sure that we come out, all of us come out as winners?
Yeah, thanks. See, I mean, when you talk about, online aggregator, first of all, we need to see that how big this market is. Now, if you see globally, aggregators are not making that amount of dent as far as motor insurance grows, wherever you go. So in United States of America, I mean, aggregators are none too less. In United Kingdom only, we find that fair amount of web aggregators are there who are actually asking their customers to come on their portal and buy insurance. But when we go to basics, we find that insurance is not just buying a piece of paper. It's a full ecosystem where a customer buys a policy, and then always the insurer need to ensure himself that the customer is put to the best of the possible position when time to claim comes. And when this ecosystem comes in picture, possibly web aggregators are not able to create that value in that whole value chain to ensure that post purchase of that policy, customer is given best of the comfort in terms of claim services also. So if you see, even in the Western market also, motor dealers very importantly play a very critical role there, because they actually have got that whole value chain going, where the customer buys the policy, experiences the claim, get the settlement, and goes back home happily, which is not the case with the other platform partners. So what we have to understand here is that how actually we enhance the value proposition of MISPs and motor dealers to ensure that that whole value chain comes to the rescue of the customer when it is actually required, which I think a lot of web aggregators and of course online platforms we have been discussing so far are trying to do. But there are two things which need to be critically analyzed. That one is capacity, and another is capital. They have got the capital, but the capacity is not there. And capacity does not mean in terms of holding a workshop or a garages to entertain. Capacity also means that is there a required amount of skill there. And that is skill, is somewhat, is making that gray and that gap, widening every moment passing by. So after huge amount of effort, still I feel that web aggregators are finding it very difficult to actually scale beyond a level, and we are seeing a fair amount of translation in capital market when they are actually, listing themselves. So I mean, yes, moment we see the extension of value creation from MISP and motor dealership, we may see that the customer would be more happier and the value chain would be easily goes uncompromised when it comes to customer centricity.
Thank you so much.
I just have a, sorry, I'm just kind of barging in between, but I have a little, a view which could be a little contrary, but in my opinion, and just to kind of add to Jagdeep's point, the real answer to that thing is going to be, what are you comparing with what? Are you really comparing apples with oranges? Essentially what we have seen today and in the larger ecosystem, that the product which we do under the MISP guidelines today has a set of offerings which are far more superior than what you could generally get in the open market. What is critical hence is to recognize and demonstrate that there is a product A which is a little different from product B. Unfortunately, till date, we had the standard product, and hence the only barometer on which people were wanting to differentiate itself was price. I think we all must would have heard the latest use and file guidelines which have come from the regulator. What we are going to really see over the next couple of quarters, our insurance company is going to possibly innovate on the products and create a level playing field where we'll start to see the genuine comparison between a product A and a product B. The day that happens, I think a lot of things will kind of really start to get settled. So as dealers, we shouldn't be worrying to sell something and to, let's say, have a limitation of only 50% discount, while on alternate channels it could be a differential discount. That today happens because there is an inherent change in the product, which today unfortunately is not very strongly recognized. The day that differentiation gets recognized, I think the consumer will then start to make the right set of choice. He might choose for a signature product or he might choose for a non-signature product. But that choice has to be fundamentally demonstrated by the customer. And if he has made the choice and if he is serviced accordingly, I don't think that there is going to be an issue which is going to be all across. So in my opinion, the new use and file guidelines are going to kind of really bring in a lot of ease towards this point specifically, all across the ecosystem.
Another point, so Anand spoke about the product being differentiated, and so that is just going to happen. The another point, on the first points that you raised on the MISP guidelines and others, so the new IRDA chairman, Mr. Devashish Panda, has been very, very clear, and the press releases are also there, that 100 by 2047 means when India reaches 100 years of independence, 100% of the country should have insurance. So the entire motto of the regulator is ease of business. So some committees have been formed, and one of the committees is looking at distribution architecture and how to create this distribution architecture much better, so that you can reach to the customers with all kinds of products. So where I believe the MISPs with this kind of data and crores of customers will be playing a huge important role in days to come or in quarters to come.
I think it's a very interesting topic which has actually come up in terms of 10 years ago, insurance products used to be plain vanilla. Now you don't get any plain vanillas out there. It's quite complicated. It is quite complex, that it is actually becoming very hard even for the customer to choose. Here comes the skill levels. I think the skill levels at dealerships need to be so high that we should be well informed, our team should be well trained in order to meet these requirements. As an industry, what do you think, Gunashekhar-san, the industry can do to help the training requirements, which are there, but probably it can get a lot better at dealerships?
As far as dealerships are concerned, I think this service advisor is the first point of contact. And at the time of claim, the person who takes care of the claim process is the next touch point. The number of policy holders whom do we touch at the first beginning, at the time of sale, may not be equal to number of people who comes back for claim service. It's only some 20 to 30% will come back and experience the claim. But remaining people, both maybe as insurers as well as dealers, we should be increasing our touch points and maybe enhancing the skills of our own team members together as insurers and dealers together. We have to work towards that remaining 70% or 60% of the customers who never experienced a claim. So that is a missing link, I think. Otherwise, like if any customer comes to you and then experience our seamless process of cashless, and then they are overwhelmed, and they will remain with us forever, both for insurers as well as the dealer. But both of us are missing that 70% or 60% of the customer who doesn't claim, who may come back only for renewal, may or may not, or maybe like as Mr. Sidhu was asking, that aggregators may woo them away, and that type of customers any day we might even lose, because there are type of customers who are going only for pricing, nothing else. But for them also, if we make them experience what are the value adds, if they go through the dealership and then the OEM driven programs, or maybe like sponsored programs, then probably our retention ratios can be very, very good and higher, and lifelong customer sticky points can be improved. That's what I feel.
We can't talk about any vertical in the automobile business without talking about technology. Technology is something which has helped. I mean, right now a lot of surveying is done actually through video, and that has really helped in bringing down takt time to a level which is quite helpful for the customer, because we are able to return the vehicle back to the customer as fast as possible. And also in terms of the takt time of the vehicle spent at workshops, because we can go on to the next vehicle, and that has really helped. But in the West, there are also technology which has been applied in a pay-as-you-go basis. For example, in America, at one point of time, I know based on an age of the driver, the insurance premiums used to change. Later on, it came to a fact that based on PIN code, where the particular customer stays, it used to change, whether it's a suburb or whether it is in the city center. But now it has also come because of telematics being deployed in so many vehicles. Based on the driving pattern, there is a lot of premiums are calculated. And it is something like your phone, pay as you go. So it's so much more, I would say, judicious, because one customer who's a good driver need not bear the burden of a pool of bad drivers. So this is something which is, it's a question whether will we have such kind of systems in India?
So you spoke about telematics and you spoke about pay, how you drive. So, but before that, the pay as you drive, the regulator allowed is under sandbox. And after yesterday, when the motor product has been opened up for use and file, where the regulator wants the insurers to have innovative products, so pay as you drive, which worked under sandbox for few companies and stopped after that stipulated period or the premium, so those will come. So basically, you will not subsidize someone else. Basically, you drive only 5,000 kilometers a year, and someone drives 20,000 kilometers, so his probability of accident will be far higher, but both of you pay the same premium. So that is going to go off. So if you have a second card, so you can have a much reduced premium based on your usage. Pay how you drive, even in Europe, has not been very successful for individual users, except for some parts of Italy where for some commercial purpose they use it. In India, we have a different kind of a challenge, because one car is driven by 5 different drivers. You really do not know that who is driving the car at what point of time. So if someone is driving and he accelerates or he does something over speeds, and then you increase the premium the next moment when a very good driver is driving, the consumer is not going to take it, because the consumer will not understand that why my premium has gone up. Consumer can still understand that yes, I have driven only 5,000 kilometers, so my premium is low, or if I cross 20,000 kilometers, my premium is going to go high. So that's the reason that part will be, I think all the insurance companies will be launching that product in the next few months, I believe, and not few quarters. But pay how you drive, I think it will be limited only to the commercial vehicle users, where you have the same kind of drivers, where you can rate the drivers based on their driving score, coming to the telematics, and the insurance companies will be charging the insurance premium based on the drivers' driving skills rather than the vehicles. But to do it on the individual basis, because of the kind of a way we use our cars will be difficult.
So you'd be saying that it's for commercial vehicles, it's an absolute go, but for passenger cars, probably not.
Yeah, but of course, we have to also solve another problem of data sharing and the data privacy laws, and we have to basically, we are waiting for the data law to come and to understand what kind of sharing and to what extent the insurers will be able to absorb the data. In Europe, under GDPR, there are certain regulations, so we will see that how it impacts us when we are going to use the data and our pricing models will work. But in India also, what you said that about the PIN code and others, I think most of the insurance companies do have the pricing in that manner. The only thing that it doesn't happen is the dynamic pricing on a real-time basis. So most of the insurance companies do have the ability to do a dynamic price, but they don't do it, but on a PIN code basis, on the basis of the regions, locations, make, model, vintage, the pricing of the vehicles have been made so granular.
So another challenge could be, what if driverless car comes? So how do we rate the drivers? So there's no driver. So that's going to be another future challenge for all of us. So maybe, as you rightly said, that geography is one thing, and the traffic conditions are maybe like where you drive and who owns it. And basically the rating has to be segment-wise, how fast a car can be driven. Whoever drives a particular car cannot go beyond a particular speed, is expected to meet a particular type of risk. So risk-based rating is slowly evolving from the vehicle itself to the owner, to the driver, and to the technology. So motor insurance might totally migrate into liability itself if it is a driverless car. So maybe at OEM level, all the vehicles will get insured for lifelong, like lifetime tax, lifetime insurance, if it is coming up as a evolution. So a major disruption is expected when the technology changes. Plus one more point in technology is that all of us do have fantastic technology. Insurers have got a different apps. Dealers do have a different apps for tracking all the customers and then CRM utilities. OEMs have got a different apps. But there is no single platform where all of us allow all our apps to talk to each other and then give a seamless experience to the customer. So customer should have only one app to talk to their OEM, dealer, insurer, and ultimate other users. And it should enable to buy other products also, where you are anticipating cross-selling also. Why not? So that should be the future of Shayad Insurance.
I think it's a very holistic way and a utopian way of life. I hope we get there at some point of time.
I want to add few. Yeah.
So just to add, Vignesh, I mean, my two bits is two things are going to happen. One is the problem, Chief, what you said is going to be there, but I think it's going to get largely sorted by technology only. There are blockchain applications which are coming in the market, which is going to really allow multi-dimensional data flow across format of players in the ecosystem at a very easier pace. We are doing some bit of pilots as we speak, and we are seeing some early signs of success. Also to add to what extend to what Partha had said, it is true. The first phase is going to take off with the easiest thing, which is on how many kilometers you are driving. But I think we should not be surprised in the Indian insurance market, at least in the next few sort of months or quarters, whatever it is. We'll definitely also see pay how you drive. What is very critical is defining the SOPs around it, defining how do you really want to rate that entire equilibrium. And I think eventually it's just a point in time where most of the insurers are going to come with their rating set of engines, share some bit of algorithms back with the OEMs, and possibly get a rate point. And I think the rate point is going to be critical in defining what is the price at which you would kind of start to insure. So that's how we see the industry. Yes, it's going to start with the number of kilometers thing, but we are fairly optimistic that I think it's just about function time that we'll also see pay how you drive become far more stronger in terms of value prop for the customer at the end of the day. And that will get solved with one of the problems which what was pointed out in terms of application. I think that's where the blockchain technology is going to help a lot.
Interesting.
Now you see, if you see, across the globe, where actually telematics have been a successful story. The situation has been that where the customer has got some value out of it, insurer have got some value out of it, and of course the regulator means law enforcement agencies also. If they have got some value out of it. So if you talk about, telematic, that has been an incentive for a customer to actually bring down his premium. Now, if you compare or draw some parity, a I-20 here in India costs us not more than 300 odd US dollars. But if you have to, run this I-20 in London, possibly if you're a bad driver, you have to pay 200 pounds a year. I mean, there's a stark difference between, what you pay here and what you pay abroad. So, I mean, they have the incentive to actually use telematics to prove to the insurer that, yes, I'm a safe driver, I'm a good law-abiding kind of citizen, and I can actually, bring relatively lower losses to the insurance company. It makes sense to actually drive telematics. In country like us, where we have got premium below our burn cost, okay, and insurance, having operating losses for years together, I mean, it's a difficult proposition to be successful in our country till the time we, start respecting the sanity of pricing going forward. But yes, what telematics can do positively is that it can bring some amount of, cohesiveness between the insurer. Where the incentivization don't work, disincentivization should work. So if you see UAE, there is no incentivization for good driving, no? But you are disincentivized if at all you are a poor driver. So you have yellow points, red points, and then you get a challan, every alternate day, and costing you in dirhams. Possibly in the worst possible thing a driver should, confront. So I mean, when incentives don't work, disincentives should work, and for that, what you have to do is that every insurance company, and of course all the people in this whole value chain, what Mr. Gurushekharan was just mentioning, to have collection of data, a data which can be shared in terms of driving pattern and behavior of customer across, and then accordingly every year who bid at his cost of capital to actually insure that customer, good and bad. Possibly that will bring some amount of fairness in actually having telematics going forward. Other than that, if you don't have that, I mean, it's just a good technological point to actually keep talking, and we have been talking over it for good 5-10 years, if I'm not wrong. But yes, in India, it will only make sense when it is actually contributing to disincentivization than incentivization.
It's a very interesting point you brought in, because this also has some link with road safety, and probably incentivizing or disincentivizing driving, proper driving, could actually lead to saving lives, better road discipline and road sense. Thank you so much, gentlemen, for being part of the discussion. Could we throw the opportunity open to the floor for asking any questions? Could we have a mic over here, please?
Check. Thank you. Hello. Good evening. First of all, you all people have good knowledge of law and regulation of the insurance. I want to discuss a question which our dealers faces sometimes. One vehicles come in workshop after accident, and insurance company gave him work order to make the vehicles. Dealer placed the order for spare parts to OEM, and OEM send the spare parts, vehicles become ready, and also insurance company gave the delivery order to the dealer. When customer came to take the delivery of the vehicle, one phone came from insurance company that you have not to deliver the vehicle to the customer because his driving license is not good. He failed. What law can save the dealer to save their money? Actually, dealer has invested the money to making the vehicles. What law can save the dealer to recover the money? And also, customer has given legal action to the dealer. So, how the dealer can be saved from this problem, and how can dealer can recover their money? Thanks.
I'll go for it. Yeah, see, broadly, I think it's a good and relevant question that in case if you got the work order approved, then do you really not get paid for it, subject to some bit of finding by an insurance company? We have to understand some of the basic principles in terms of when the claim is made. It's about the right side of representation from the customer side. There was a point in time when we used to have challenges around turnaround times, but I think over the years the industry has significantly matured, and today I don't think that we have even like single digit set of cases where we end up encountering such set of situation. The reason because people are fairly well advanced is because of tech, because of open data sources from which you can extract the license validity, the license certificates, so on and so forth. And honestly, personally, in the company where we work, we have not encountered too many challenges around this thing. It used to be a challenge in the past, but I think with open data source integration, which has happened across the industry, as we speak, possibly the problem is a minuscule. But in case if it is, I think both the dealer and the customer are taken into confidence for the right sort of conversation. And but in principle, we have a reality that if there is a decision to be taken and decision has to be in favor, we take the decision in favor of a partner in case if we have kind of really authorized for a particular sort of work order.
But how the dealer may be saved from the investment and problems?
That's what I try to say, sir. That what we end up doing is that in case if there is an odd off case where there is a disagreement between the three parties, the insurance companies typically would end up taking the decision in favor of the dealership and hence would make payment of such set of cases.
Thank you.
Anyone else would like to give a query here? Lovely.
Okay. My first question is nowadays, survey deputation above 50,000 bucks has to be outsourced. There is some law which has come, there is some association of the surveyors which has been imposed to the dealers that if you get the survey from the in-house surveyor above 50,000, maybe north, I'm not talking about north, on some dealers they have filed FIR. So in that condition, that my question is related to sir. In that conditions, surveyor has the authority to approve the work order. If the loss is, suppose if the loss is 2 lakhs, 3 lakhs, 4 lakhs, 5 lakhs bucks, surveyor has given approval. Insurance company has deputed a surveyor. It's an external surveyor which has been deputed by the insurance company. Insurance company authorized him to take all decisions on their behalf. Surveyor gives approval to the dealer to repair the car. After 10 days or 15 days, when that car has been repaired, surveyor submitted the report to the insurance company. After that, some legal documents proved that it is not authenticated, then who is at fault? Maybe your question is this. Nowadays, initially, we have Vahan portal. We can get it checked from the portal. Somehow, there are some authorities, RTAs, where you can get the details. There are few authorities. In that case, what will be the consequences? At the end of the day, most of times, I'm not talking about the private insurance companies. Most of the cases happens into the public sector. We are here with the private companies. You know? It's a common discussion between the two partners. You know? What about the public companies? What we should do? If I'm talking about New India, United Insurance, Oriental, National.
Okay, let me. So, sir, first of all, I think we 5 of us do not have a locus standi to answer your last part of the question about the service standards of the public sector or the private sector. I think all the insurance companies, whether they're in the private sector or the public sector, are aware of the reality, and they are doing, maybe there are some exceptions here and there, but that is not the rule. whether they are in the private sector or the public sector. That is number one. Number two, the point that you raised, that whether there is a law now being introduced about any survey more than, for any damage more than 50,000 rupees to be surveyed by external surveyors. That was always the rule, and beyond 50,000 rupees, you have to appoint external surveyors, that most of the insurers do. And based on that survey report, the insurance companies takes the call whether, so insurance company goes by the report of the surveyor and takes the call whether to go ahead with it or repudiate it. So that's very clear. However, as Anand was mentioning, if there are one-off cases, and of course there can be one-off cases with the customer's conditions or the kind of a damage, or if it is found to be fraudulent damage, or the damage not happening because of an accident but something else. So that is a one-to-one conversation, private conversation between the dealership and the insurance companies. And as we understand that in most of the cases, it is settled between the two partners in a true spirit of partnership.
Also to extend, I think what is also critical, not to go back too much in the past, but as we head into the future, the real answer and the real response to this scenario is going to be handled by technology. Thankfully, the technology is there where today the entire ownership is being taken by the insurance companies. And in a blended journey, you have the external surveyors also integrated, so that the reality from day one is established equally amongst the insurance company, the dealership, as well as the surveyors, whether in-house or external surveys which are there. Most of the private insurers, through their video streaming, integrated video streaming apps along with the surveys today, handle almost 70% plus of the cases through that bit of tech intervention. And as we are going to move forward, tech intervention is going to be pivotal in terms of deciding the real consumer experience. And I think most of the insurance companies are investing significantly into that to ensure that the transparency is kind of established from day one itself.
Sir, very well said. Accepted it. But the reality is somehow something different when we are talking about. Okay, I do accept it. But one more question. What insurance companies are doing to reduce claim ratio?
What insurance companies are doing to reduce claim ratio? Increase the
Yes.
price if the ratios are very high. That's all what you need to do. I mean, see, as insurance company, let me tell you very categorically, it's not an industry which is designed to be a non-profit industry. It's an industry which is designed to be a profit industry. And hence, what is critical is that you operate at the right set of ratios. In case if the experience is very bad, and if the experience is generally emerging out of factors which are contributed towards defining your ultimate loss ratios, I think the insurance companies would work towards that along with the dealer principles. We have had situations in the past, and I'm sure that we'll have situations in the future where if there are stress points, it's discussed in a good fashion between the insurance companies, the dealers, as well as the brokers or the OEMs who are handling the programs. And then we come to a logical set of conclusion. But we have a genuine belief that you have to have the right price for the right risk.
Thank you so much. Thanks for the active participation again from the audience. With this, we bring this session to a close. Thank you so much.
Please stay with us, gentlemen. I'd like to invite on stage Mr. Abhimanyu Nangya to join us on stage, please, to present a memento to Mr. Anand Singhi. Also, I'd like to welcome Mr. Anuj Pandey to also join us on stage. If you are sitting at the back, I'd request you to start moving towards the stage, please. Mr. Abhimanyu Nangya to Mr. Anand Singhi. Can I request you to please step forward? Yes, thank you so much. May I request Mr. Anuj Pandey to join us on stage and present a memento to Mr. Parthanil Ghosh. May I also invite Mr. Ashish Kothari to join us on stage, please. Mr. Ashish Kothari will be presenting to Mr. Jagjit Sidhu. Can I also invite Mr. Praveen Sherke to join us on stage? Thank you so much. Mr. Praveen Sherke will be presenting a memento to Mr. Gunasai Karboga. Thank you so much, gentlemen. Thank you for that wonderful conversation. I'd like you to take your seats in the audience. Can we have our panelists to join us on stage one last time for a picture together? Thank you so much, gentlemen, once again. Thank you very much.